Very good evening. You're watching Primetime. I'm Panaya.
And my name is Ayush Alavadi. Let's have a look at today's headlines. Prime Minister Narendra Modi breaks his silence on the recent incidents of violence against women, says the guilty will not be spared and that justice will be delivered.
Infosys looks to distance itself from its troubled past, decides to sell a subsidiary Panaya, a buyout that Narayana Murthy had red flagged.
Infosys reports a profit decline in Q4 due to one-time tax gain in the third quarter. Lowers its FY19 operating margin guidance even as the IT heavyweight delivers a largely in-line Q4 earnings.
Binani Industries withdraws its petition seeking termination of insolvency process of Binani Cements. Dalmia Bharat, the winning bidder, claims a nexus between a promoter and a failed bidder even as the case returns back to the NCLT.
Sunil Munjal says that Fortis Healthcare is in urgent need of funds rather than a complex deal a day after Hero Enterprise and the Burman family joined the race for Fortis.
Markets extend gains for the seventh straight day to post the longest winning streak this year so far. Well, to the latest developments in the Binani Cement insolvency case, parent Binani Industries has withdrawn its plea in the Supreme Court. The plea has sought to terminate the insolvency process and reach an out-of-court settlement with the creditors. Here are some of the arguments made in the Apex Court today. Binani Industries argued that the offer from Ultratech ensures that all creditors are paid in full.
Meanwhile, the other bidder, Dalmia Bharat, alleged that there was an unholy alliance between a promoter and a failed bidder, while Ultratech argued that there was no grounds to disqualify them from making the offer. The court queried the efforts of a failed bidder to support Binani's offer to repay lenders and also pointed to the impending hearings in the NCLT and the NCLAT. Binani Industries will now continue arguments in the NCLT and thereafter the NCLAT. Vishwanath Nair caught up with representatives of both Binani and Dalmia Bharat earlier in the day. Here's a summary of what they make of the Binani cement case going back to the NCLT.
So earlier today, Bloomberg Quint spoke with Sameer Kaji, a senior advisor for the Binani Group, as well as Mahendra Singhi, who is the group CEO for the Dalmia Bharat Group, on the developments in the Supreme Court and what they thought about what this meant for their cases individually. So first we spoke to Sameer Kaji, who had to say that the Binani camp believed that this application to the Supreme Court was probably premature, and therefore they would go to the NCLT on Monday, which is when the hearing was scheduled for the insolvency proceedings. They will go to the NCLT and then they will argue about the out-of-court settlement in favor of the out-of-court settlement. Also, what Sameer Kaji said is that after the NCLT has decided on what to do with this out-of-court settlement, that is when they will decide if they want to go back to the Supreme Court and fight this case again. So it entirely depends on what the NCLT says on Monday about the Dalmia Bharat bid that has been submitted by the lenders as the final probable bid that they are going to back. On the other hand, Mahendra Kumar Singhi said that the Dalmia Bharat Group was very happy with the developments at the Supreme Court, and he said that that since the Supreme Court did not terminate the IBC process, it was a win for both the company as well as the Supreme Court, and said that it is good that the Supreme Court did not listen to the defaulting promoter or the losing bidder. Apart from this, when asked about the case that a group of operational creditors have filed against the Dalmia Bharat bid, what Mr. Singhi had to say is that whether it's some kind of operational creditor or an operational creditor who is trying to go to court or the defaulting promoter, both of them are actually fronting someone. He did not clarify who they were front-ending, but he said that their presence itself is problematic, and he said that according to the resolution plan that the Dalmia Bharat Group has submitted to the lenders, about 99% of the operational creditors are likely to be paid off. So he was clear that that many operational creditors would be paid off using that resolution plan that they have submitted, but for the remaining operational creditors who may be some kind of related parties or some other dented parties, they would not be paid out through this entire entire process. Apart from this, Mr. Singhi also pointed out that the lenders in this whole process have continuously backed Dalmia Bharat in its bid, and he said that under the insolvency process, about 99.4% lenders representing debt of about 99.4% in Binani Cement had backed Dalmia in their bid. So they were confident that the lenders will back them even at the NCLT on Monday when the case comes up for hearing again.
Well, the Binani Cement case has seen several twists and turns ever since bids for Binani Cement were invited. Here's a look at some of the big milestones in this case so far. Now, IT big boy Infosys came out with its Q4 earnings today. The numbers were largely in line with estimates. Profit declined sequentially due to a one-off tax gain in Q3, while revenues rose 1.6% and 1.8% in rupee and dollar terms, respectively. But what really stood out from Infosys earnings was the new CEO, Salil Parekh's decision to sell subsidiary Panaya. Remember, the Panaya deal was at the heart of the boardroom tussle, which led to the exits of former CEO Vishal Sikka and former chairman R. Seshasai. Listen in to new CEO Salil Parekh outline the company's rationale for opting to sell Panaya.
We did a strategic review of our portfolio. We looked at where our strategy direction was, which is what I just described. It comprises of digital and core IT services and a strong suite of product portfolio. For example, Finacle platforms such as Edge, Nia, which we are further expanding, and McCamish, which is an insurance platform. And within that strategic review, we decided to initiate active interest in Panaya and Skava from external buyers because it did not fit all of the criteria we have today for scaling our businesses, given the conditions we have for the business today.
After reclassification, we have assessed the fair value and taken an impairment. In the consolidated books of Infosys Limited Group, it is $18 million, but the write-down of value in the standalone books of Infosys Limited is $90 million.
We see a market that is in a stable to good condition. Our own businesses are doing well, as I described some of them. You heard from Praveen on the specifics of some of the other businesses within our mix. Given those external factors and our own positioning, that was the range of guidance that we developed.
Clearly, we want to invest in digital wherever we are underinvested. 2, we want to foolproof our US talent model. 3, we also want to revitalize our sales for further accelerating the deal wins. 4, we also want to repurpose our employees given our digital journey. So these are the 3 things. So that's why we have said 22 to 24. But nevertheless, all the operational efficiency, productivity focus that we have shown in the last 2 years, there will be unwavering focus on that. But at the same time, we want to invest to leverage the business opportunities.
Well, if you want to catch up with what happened at Infosys' earnings, this is your one-stop shop. Agam Vakil sums up the key highlights from Infosys' Q4 earnings for you.
Well, the top takeaways from Infosys fourth quarter earnings, starting off with dollar revenues up as much as 1.8% quarter on quarter, as well as EBIT margins at around 24.7% versus 24.3%, in line with consensus expectations. The second and perhaps the more important takeaway was the guidance. While the dollar revenue guidance stood around 6 to 8% for FY19 on constant currency terms, and that was also in line with expectations, the disappointment came in when it came to the margins guidance at 22 to 24% for FY19 in comparison to 23 to 25% for FY18, as well as what the street was working with. Of course, so we've seen subdued 0.9% growth in financial services vertical. On the other hand, the energy vertical started to see a pickup, which moved up by as much as 4.6%. The company does seek buyers in its subsidiaries Skava as well as Panaya, and it has also taken a write-down of as much as 118 crores on Panaya for in the fourth quarter on a consolidated basis. And finally, they will allocate 13,000 crores to shareholders, of which 2,600 crores will be given out in dividends.
All right, Urmil Shah, Associate Vice President and Research Analyst at IDBI Capital, joins us now for more on the Infosys numbers. Urmil, welcome to the show. First, your take on the numbers, and does it point to the sector as a whole stabilizing?
Hi. So clearly, Infosys has, reiterated what other companies which have been delivering good growth have been speaking on. That is mainly the digital solutions growing faster than the company growth, and it would be important for the digital services to grow much faster for the company to the growth at the overall company level to improve. Clearly, the growth outlook for FY19 is in line with our expectations. However, the EBIT margin band being brought down by 100 basis points at the lower and the top end is slightly higher than what we were expecting. We had built in a 45 basis point YOY decline in EBIT margins. Secondly, while not a very material impact on financials, but the sale of Skava and Panaya is also a slight surprise, if we could say, on the negative side, because both the products were expected to generate good cross-sell for Infosys other services and thus drive growth. Also important to understand was on the capital allocation policy. So the positive surprise over there was, in addition to the 70% of the free cash flow being paid out, additional 13,000 crores of payout for FY19. So this in summary, is our take on the results. So the Q4 was in line with our expectation. FY19 guidance, slight negative surprise on EBIT margin, and also a negative surprise as regards sale of Skava and Panaya.
Right, Urmil, when it comes to the guidance for operating margins, it seems like Infosys is given a rather conservative sort of guidance there. How do you look at that development?
So, the analyst call just got over, and they have, articulated 3-4 investment areas. One is on building the domain capabilities in digital solutions, also investment in the sales and marketing, especially for large deals as well as digital deals. Then also as regards refresh of the compensation to the employees and indicating towards a higher variable pay on targets being achieved. So this is something the likes of TCS has already done. I'm indicating towards the investment in digital solutions. So Infi will have to do it to drive growth in revenues. And we were building in 45 bips decline in EBIT margins for FY19. but that was largely on account of higher local hiring in the US, Europe and Australia. So the other factors have been a slight negative surprise to us. But we believe that Infy should do upwards of midpoint of the range or towards the top end. So we believe that EBIT margin should come in between 23.5% to 24%.
Yeah, Urmil, as a follow-up question, you know, considering the company has articulated this four-pillar strategy, so to speak. Some of the things you mentioned, being it using more AI and automation, reskilling employees, expanding localization in markets like US, Europe, and Australia, and of course, scaling the digital business. The way the IT sector, you know, things have panned out in the IT sector over the past few years, what do you make of this strategy, Urmil?
So clearly, Infosys is doing what is the need of the hour, and something that the likes of TCS have already done. So, you know, during Dr. Vishal Sikka's tenure, the focus was to focus more on IT products and leverage IT products to drive the services revenue. Now, in the revised, strategic roadmap, clearly the focus is more on growing the digital solutions and use IT products to top it up with growth. So this is a slight change in the strategy that has come in, and according to us, this is a good move. Whenever the investment have to be made, of course it would impact the profitability in the near term. But according to us, this will be very important if Infy has to get back to double-digit growth in FY20 and beyond. Because for TCS, in fact, we are expecting it to deliver the best improvement in revenue growth amongst large caps. So for FY19, we are building in revenue growth upwards of 11% versus 8% growth in FY18. So if Infy is able to execute on the growth in digital solutions well in FY19, there is a good chance that it can also get back to double-digit growth in FY20 onwards.
All right, thank you so much for that, Urmil. They're breaking down those Infy numbers. And of course, that's the first big result as this result season kicks off. Let's move focus now to national stories. And here's the big one. After widespread outrage over instances of violence against women and rape in Uttar Pradesh and Jammu and Kashmir, Prime Minister Narendra Modi has broken his silence on the attacks. Prime Minister said that the incidents in the last few days challenged the concept of social justice and that the guilty will not be spared and justice will be served.
सामाजिक न्याय इस सरकार के लिए सिर्फ कहने सुनने की बात नहीं, बल्कि हमारा कमिटमेंट, ये हमारी श्रद्धा है। लेकिन जिस तरह की घटनाएं हमने बीते दिनों में देखी है, वो सामाजिक न्याय की अवधारणा को चुनौती देती है। पिछले 2 दिन से जो घटनाएं चर्चा में हैं, वो निश्चित रूप से किसी भी सभ्य समाज के लिए शोभा नहीं देती है, ये शर्मनाक है। हमारे स्वतंत्रता सेनानियों ने, जिन्होंने अपनी जिंदगी इस देश के भविष्य के लिए बलिदान कर दी, ये उनके बलिदान का अपमान है। एक समाज के रूप में, एक देश के रूप में हम सब इसके लिए शर्मसार हैं। देश के किसी भी राज्य में, किसी भी क्षेत्र में होने वाली ऐसी वारदातें हमारी मानवीय संवेदनाओं को झकझोर देती है। मैं देश को विश्वास दिलाना चाहता हूं कि कोई अपराधी बचेगा नहीं, न्याय होगा और पूरा होगा। उन बेटियों के साथ जो जुल्म हुआ है, उन बेटियों को न्याय मिल के रहेगा। हमारे समाज की इस आंतरिक बुराई को खत्म करने का काम हम सबको मिलकर के करना होगा। और आपको स्मरण होगा, प्रधानमंत्री बनने के बाद 2014 में मेरा पहला भाषण लाल किले की प्राचीर से था। और लाल किले से बोलने का साहस मैंने किया था। और मैंने पहले मेरे भाषण में कहा था, और मैंने कहा था, हम लड़की को तो पूछते हैं, देर से घर आई तो पूछते हैं कहां गई थी, कहां थी, क्यों देर से आई। मैंने कहा कि लड़कियों पूछने वाले माँ बाप से मैं कहने चाहता हूं, अपने लड़कों से पूछो वो कहां गया था, रात देर से क्यों आया। ये माताओं बहनों पर जो जुल्म होते हैं, किसी न किसी माँ का वो बेटा होता है। और इसलिए एक सामाजिक संवेदना, ये हम सबका दायित्व बनता है। हम सब ने मिलकर के हमारी समाज की बुराइयों से लड़ना है, और गुनहगारों को सख्त से सख्त सजा हो, ये हम सबकी जिम्मेवारी है। और भारत सरकार उस जिम्मेवारी को पूरा करने के लिए कोई कोताही नहीं होने देगी, ये मैं देशवासियों को विश्वास दिलाना चाहता हूं। हमें पारिवारिक व्यवस्था, सोशल वैल्यूज को लेकर न्याय व्यवस्था तक सभी को इसके लिए मजबूत करना होगा, तभी हम बाबा साहब के सपनों का भारत बना पाएंगे।
Well, facing backlash over their participation in the rally for the Kathua rape accused, two BJP ministers in the Jammu and Kashmir government, Lal Singh and Chandra Prakash, have submitted their resignations to the party chief as well. All of this action coming after an outrage on social media, especially asking why the government of the day has not acted yet, or why the Prime Minister has not spoken. Well, he's broken his silence just a few hours ago. Well, the Supreme Court today took a note of lawyers obstructing the judicial process in the Kathua gang rape and murder case and initiated a case on its own accord. The top court said that lawyers' bodies have a solemn duty to not obstruct advocates representing the accused or the victim's family in the courts. The Supreme Court bench sought responses on the conduct of lawyers from the Bar Council of India, Jammu and Kashmir Bar Council, Jammu High Court Bar Association and the Kathua District Bar Association by April 19th. This comes after earlier this week lawyers held a protest against the charge sheet filed against 7 people accused of kidnapping, raping and killing an 8-year-old girl in January in Kathua district of Jammu and Kashmir. And the Allahabad High Court today directed the CBI to arrest BJP MLA Kuldeep Singh Sengar, who is accused in the Unnao rape case. The direction from the High Court came after the Council for the Uttar Pradesh government said that Sengar has been detained for interrogation but not arrested yet. The court directed the CBI to carry out an investigation and consider filing an application for cancellation of bail granted to other accused in the case. The High Court has also asked the CBI to file a status report by the 2nd of May.
Now, the Supreme Court has decided to examine the PIL file by former Law Minister Shanti Bhushan. This plea challenges the Chief Justice's authority as the master of the roster. The Apex Court bench sought the assistance of Attorney General K.K. Venugopal and Additional Solicitor General Tushar Mehta in dealing with the PIL. The bench said it has already held that the Chief Justice of India is the master of the roster. Senior Advocate Dushyant Dave, appearing for Shanti Bhushan, claimed the CJI was exercising his power only in exceptional matters. Bhushan's petition came up for hearing a day after Justice Chelameshwar refused to hear the plea, saying he did not want his order to be reversed in 24 hours. The Apex Court will now hear the matter on April 27th.
Any power is given to the Chief Justice of India by the Constitution. It is a power given to the Supreme Court as an institution to be exercised by the Chief Justice as a representative of the institution. As repeatedly the Constitution benches have interpreted this, namely that even though the Constitution speaks of Chief Justice recommending judges for appointment, it does not mean Chief Justice alone. He has to exercise the power in consultation with 5 senior most judges. Then only it will be deemed to be an exercise by the Chief Justice.
Now, it's the 7th straight day of gains in Dalal Street as markets posted their longest winning streak this year. The Sensex and the Nifty both gained over 0.2%. Navneet Saluja sums up the week's market action in this report.
Well, it was the third straight week for the markets to gain. Nifty gained about 1.5% during this week. Bank Nifty also surged over 1%. The broader markets also saw gains of over 1%. In fact, if you look at a couple of Nifty constituents, which were the weekly gainers, the aluminium maker Hindalco features there. And the reason for the same was that the aluminium prices on London Metal Exchange rallied because of the sanctions which were issued by US on a Russian company, Rusal, on back of which aluminium prices globally rallied. The other top pack was the IT one. If you look at stocks like Tech Mahindra, HCL, Infosys as well, all of them rallied during the week. In fact, they featured among the top gainers. Among the losing side, you had the oil marketing companies, all three of them, BPCL, HPCL, IOC, amid the rising crude oil prices. Also the Brent touching the mark of $70 per barrel. There was also some news flow, some news reports indicating that these oil marketing companies could be asked some bit of to absorb some bit of price hike, but later during the week the oil minister denied this news. But still there was no recovery seen. There's a lot of shorts which are built up in these counters. Just want to highlight a couple of gainers from the broader markets. India Bulls Ventures, IRB Infra touched its fresh 52-week high. Dish TV was in focus. That also breached its 200-day moving average after the promoters said that they would be buying back almost 26% stake. They're looking to infuse almost 3,700 crore into the company via this. And the other aluminium maker Nalco was up and about. On the losing side, you had stocks like Wakrangi, which continues to be locked in lower circuits. So clearly the stock has been locked in lower circuit for multiple trading sessions. And Mahanagar Gas was down. The reason for the same was one of the promoted entities cut down its stake around the mark of 906. Hence, there was some bit of overhang around that counter. We also saw a lot of fresh short buildup for this counter on the future side. Stocks which touched their lifetime highs during this week were the likes of Pidilite as well as Escorts.
Now, a day after the Hero Enterprise and the Berman family joined the race for Fortis Healthcare, Sunil Munjal, chairman of Hero Enterprises, says that Fortis Healthcare is in urgent need of funds rather than a complex deal. Speaking to Bloomberg Quint's Darshan Mehta, Munjal says the overhang of legal issues with Fortis's erstwhile promoters held Hero Enterprises back from investing more in the hospital chain.
We think we are putting more than the company needs, and once it gets back on track, this is a good operation. You've seen what the other healthcare institutions are giving as a return, as a bottom line. So by just improving efficiency, getting it back on track, it will start throwing up much more liquidity and cash itself. So this company has the strength to stand on its feet and take care of all its needs. And as and when there is anything required, that's the time to address it. At this moment, we're trying to address the immediate and the medium-term needs of the company, and I think this is more than what the company needs right now.
Okay, so let me get this right. You're saying that if you infuse 1,250 crores, the short-term problems will be solved, and because of this short-term problem getting solved, the company's long-term will be able to stand on its own.
This is more than the company needs in this.
So how much does it need anyway, according to you?
Yep. It's a very strong asset. It is a very good asset. It's a very strong asset. So obviously we do not have the exact numbers because we have not done diligence, but this is what is based on public information. Our belief is that currently what the company needs is between 300 to 500 crores only. So we have said we will put 500 crores right away. So all of its current needs which are coming from shortage of liquidity are met right away.
Okay.
The additional money we're putting in is for additional medium-term operation and growth of the company.
Okay. What you said that your current shareholding is close to 3%, the entity that is bidding. Post, if this gets accepted, correct, what shareholding are you looking at? Where will your shareholding reach?
So I don't know what the exact would be. That would depend on the price at which the shares finally get offered to us. But I guess that would be another 15% or so.
You'll reach
14,
close to
15,
18%?
16, somewhere in that 17, somewhere in that range, depending on the pricing.
So in short, you will become the largest shareholder in Fortis Healthcare, right?
It looks like, at this moment, it looks like it. Yeah.
Okay, what happens next? Now, as a shareholder, what happens to the Manipal deal? Will you let that go, or you will oppose that?
So I'm not sure the company needs to restructure itself. You know, that was something which had to be done out of sheer compulsion because of the state that the company is in, and the requirement for funds was coming only with those conditionalities. So if it's able to get the liquidity, if it's able to get back on its feet, if it's able to move forward and do what it needs to do, I'm not sure there is any need for the company to do excessive work. If restructuring is required sometime in the company's life in the future, maybe the company could look at it. But at this moment, I think company needs to put its head down and focus very sharply in bringing itself back on track and getting on and utilizing its potential and creating higher efficiency, managing its costs better. Because right now, the returns in this entity are lower than all the other sizable healthcare operations.
Well, it's Friday, and while the world is making Friday plans, there's still a lot more programming left on Bloomberg Quint.
Absolutely. It's been a big news day. But on Primetime Debate today, we're going to focus on the Quint exclusive story on electoral bonds. You know, Ayush, since the bonds were first announced in the 2017 budget, there have been questions. First, why should there be a cloak of anonymity to anyone who wants to donate to political parties? And now the Quint investigation raises serious questions on whether that anonymity actually exists or not. We're going to take that forward in Primetime Debate. I'm joined by Jagdeep Chokar, founding member of the ADR, and Narendra Taneja, BJP spokesperson. Do stay tuned. It's coming right up.